Shout out to Trade 245 for staying behind the channel, you feel me? They're supporting the channel and the movement we're actually trying to push here. So they're doing something good. The link to signing up with them, if you want a broker that's reliable, good, and a broker that's, you know what I'm saying, that's gonna actually be there when you're encountering these technical difficulties that may sometimes happen with brokers. Trade 245 is the one that you need to actually sign up with. The link is gonna be in the description box below. Me, I approve them because I'm trading with them, you feel me? And I know everything about how the broker works. So if you need a broker, Trade 245 is the one. Linked in the description box below. Go get it. What's up, family? It's your boy vussanie. You already know what it is. Welcome back to another video. So the one I got for you today is a very important one, as you saw on the title of the video. I'm giving you guys, a beginner's course, a full beginner's course for everyone, you understand? And the files that I'm gonna be using actually for this video, I'm gonna put it in I'm gonna send it through to the free Telegram channel that we have, and the link of that channel is gonna be in the pinned comment. So just use that link so you can get this PDF file of price action and stuff like that, right? So in today's video, I'm gonna teach you guys about price action, like the basic concept of price action. And this is gonna be for someone who's never traded before, someone who just wants to be familiar with what the trading platform is, and you know what I'm saying, the basic stuff that you need to know before you can even use strategies and stuff like that. These are things you're gonna have to be aware of. And as you can see, I'm at the offices at Trade 245, so that's the broker of my choice. The link is also gonna be below. Just sign up if you don't have a broker that you can use or whatever. You understand? And before we proceed to the video, like, comment, and subscribe. Alright, so let's go into it. So this is our price action guide. You know what I'm saying? This is a price action guide. That's the guide that I'm gonna send to the public Telegram. So if you're not on the public Telegram thing, then unfortunately you won't get this thing. But the link is there and it's free. Alright, so let's go into it, fam. So this is the thing, right? I'm gonna, first off, as you can see, we're gonna talk about the most important Forex terms, and I'm gonna explain them. These are the stuff that you need to know, so you're not confused when traders use a language and you just don't know what the hell is going on. You see, but the thing is, the most basic operations we have in trading is buying and selling, right? And for someone who doesn't know what actually buying and selling is, it doesn't mean you're literally buying something. Let's say it doesn't mean when you're buying an asset or something like that. Basically, and selling, we have buying and selling. So selling doesn't mean you're literally selling something or whatever. It just means we are predicting that the price is either gonna go up or go down, right? So buying, another word for buying is going long, and then another word for selling is going short. So let me just show you something there on a chart. Let's open a live chart so you understand what I'm saying. So you see, this is our chart. I'm just gonna full screen it. So this is our chart, right? This is our candlesticks. This green and red, what do you call them? These are basically candlesticks. There's no other way of describing these things. And the thing is this, right? Every time it's green, it means basically the market is going up, and every time it's red, as you can see, it's a drop. So when we're buying and selling, when we're buying, we're basically saying that if this thing is here, this is like the last candlestick, the most recent one. So if we're buying, we're basically saying that the market is gonna go up, and if we're selling, we're saying the market is gonna go down. So if you enter a buy now and the market goes up, then you make more profit. The higher it goes, the more money you make. If you buy and it sells, then that's where now you're losing money. Understand? So if you basically looking at a chart and you're saying, okay, this is going up. So if you're saying it's going up, then you need to buy. If you're saying it's going down, then you need to sell. And then when you're correct, you make profit. When you're on the wrong side of the market, that's when you lose money. You understand? So let's go back to our terms explained. You understand? So we also have the spread, right? So don't be scared when you open a trade and it starts on a negative number, you know, on a loss. Basically, it won't start on a crazy loss, but it will start in a minuscule loss. But that's basically the spread. why every trade starts in losses. That's basically the money that goes to the broker, the cost of trading. Actually, that's the spread, right? Then we have pips. So you need to know what a pip is. So a pip, in a way that I can explain it for you to understand, is okay. Let's see our chart. So a pip, basically, you see what's going on this side, all these numbers here, right? So the market now, if it's at this level, you can see here it says where my mouse is highlighting, it's 14907.7, right? So if it moves from 1.14907 to 14957 or something, that's me, like the difference within this number that you're seeing here, that's the number of pips that we talk about. So basically, if you go from 115 to 113, then the difference is 2 pips, because you can't just say the difference is 2 pips, you understand? So the difference in price is the number on the thing. It's the value of this thing. This is the price, and the price is shown this side here. This number here, that's the price. So it shows us the value of this market or this chart that we're looking at. And the difference in that number is called pips. You understand? So I hope you understand so far, and I'm not losing anyone. You understand? Let's move. So this is a beginner's thing. I told you guys, right? So we have take profit order and stop loss orders. Take profit and stop loss. You understand? So let's go to describe what those things are. So I'm going to go back to my chart now, right? So when I go back to my chart, let's say I want to buy here, right? Let me just use an arrow here, this one. Let's say I open a buy there, right? At this level. If I open my buy there, right? The good thing about the market is, I don't have to wait for the market to get to, if I want to close my trade at this level, I don't have to wait literally for however long it's gonna take, either hours, minutes, or whatever, for the market to get to this level. You understand? What I can do is I can open a trade, and you'll see in that panel where you open trades, there's a take profit order and a stop loss order. So that's where now you're gonna have to put in this price, and then the market, basically, when it goes and reaches that level, it will close your trade automatically. You understand? So you don't have to literally wait for trades to close and stuff like that. It will do everything for you. Like, you open a trade, you put your take profit, right? And then that means when the market gets to that level, it will close. But now you're like, hey, Mara, what about losses? And then that's when now we also have our stop losses. So if I'm saying the market can go there, right? The market can go there, but I'm not willing for this market. If it goes below, then that means I'm in a loss, right? So I don't want to lose more than this, because remember, the deeper it goes against my trade, the more my loss becomes bigger and bigger and bigger. So with the stop loss now, you can limit your loss. If it gets to this level, then the trade must close automatically, because you'll find that you're working, and then let's say you're working, and then maybe your phone, the network is messed up or something. When you come back, you find this market down here. That means you can blow an account. So blowing an account is also thing. Blowing an account is also, when the event of actually losing all your money in your account in a trade or a couple of trades. That means the way you were trading, you lost all your money. You understand what I'm saying? So let's see what we can share now. Let's see the next thing, because basically we just talked about the most basic. Man, what the hell is going on now with Zoom? Yeah. Alright. So basically we just shared the most important terms that you need to know. These are basically the most important. So basically we just shared all the most important terms in trading. This is literally all you need to know. After you know this, basically you are ready for a strategy in trading, right? So I'm gonna give you guys a nice strategy, you understand? Because I'm vussanie in the building. So I'm gonna give you guys a nice strategy. So price action trading is a strategy. Price action is the thing. Price action is basically us relying on what the market shows us in the screen to open our trades. So we need to look for certain clues and hints to see if the market is gonna push up or push down. So when we open our buys and open our sells, they're coming from a more educated standpoint. We're not just looking at a market just like I was looking at a chart now, and you don't just look at it like that and be like, okay, this market is going up or it's going down, let me buy, let me sell. You understand? It doesn't work like that. You basically have to look for certain hints and clues, like I said. So we shall proceed now. We shall proceed to looking for those things, to me showing you how to look for those things, right? So the first things first, we need to understand that the market moves in highs and lows, right? The market moves in highs and lows, and to show you this, I'm going to open the same chart that we're using, which is the NAS 100, right? So basically what happens is, I'm going to mark all the highs and lows to show you. So a high is basically a turning point at the top, right? If the market is going up, it's not going to go up forever. So where it's going to turn, that's a high. That's a high, basically. Yeah. So you don't have to look for the minuscule ones. You don't have to look for the tiniest highs or whatever. Just look for major turning points that you can see when you're looking at this market. You see, just like this one, it was a turning point, and also this one was a turning point. You know what I'm saying? So basically that's how this thing works. And the lows are the turning points, but at the bottom. So you see, just like this one, this was a turning point, and then this one was also a turning point. So these are the highs and the lows. So the market goes from a high to a low to a high to a low. And I want you to consider the most important ones, which are the ones when you're looking at a chart, the ones that you can't miss. Don't go looking for the tiniest ones like, okay, high, low, high, and stuff. Nah. Just to focus on the ones that are sticking out in that market or time frame, any time frame. You know what I'm saying? The time frame thing, it will depend on which market you're using. But if it's indices, just use 15 minutes or 5 minutes time frame, which is what you're gonna see this side. 15 minutes will just zoom it in a little bit more, and 5 minutes will zoom it more than the 15 minutes is like the sweet spot for me personally. But you can see which one feels more comfortable between the 5 minutes and the 15 minutes when you're looking at this thing, right? So on the next lesson now, we're gonna talk about support and resistance, right? But support and resistance, for a lot of people, when they look at support, let's talk about support, right? Because I'm sure if you're starting to trade now, you're definitely gonna hear these terms of support and resistance. So support is another way of talking about the low. That's the support, because it'll tell you where the market, the most recent place where the market just made a low. That is the support, which is the area we already marked, and the resistance is the most recent place where the market just made a high, which is here. And you'll see that most of the times these things are common. You see, just like this one, I just joined this one and this one, and you can kind of see. So if you're using a previous resistance when the market was here, you could have used this one, and you see what happens when the market goes there. It's gonna react. So you just need to don't go to your markets and and mark every support and resistance. Just look for the most recent high and most recent low and draw your lines there. You understand? So in this case, it's this one and this one. You just need to know where the market is playing around. So you can scope your trades from there. All right. So the next lesson that we're gonna talk about now. Next lesson in the building. We talked about support and resistance. We're flying now. We're going to talk about trends, right? So when it comes to trends, there are two types of trends, right? There's the uptrend and the downtrend. And you need to understand what's going on in the market. And the trend is one way of finding out what's going on, right? So all the strategies, you can practice them on your phone or your thing or a laptop. But clearly in a laptop, you can see that it makes more sense what's going on, right? So you need to look at the highs, the structure. You need to zoom out of the chart first and look at the highs and the lows. Look at the direction where they're going. You see, in this market, the highs are it's this high, right? There's this high, and then there's this low there, and then the next high it's lower, and then the next low is lower, and then the next high is lower, and then the next low is lower. You understand? So the market is basically in a downtrend. When the lows are going lower and the highs are going lower, it's a downtrend. And when the highs are going higher and the lows are going higher also, it's a uptrend. So you see, just like here now, let me just move. Okay, it's fine. Let me just draw my lines again. I don't mind. I'm gonna put one there and another one there. Then we're gonna go back to full screen mode. Alright, so you see now we have a low there, and then there's a high there, right? And then our next low, it's higher, and then the next one is higher, and then the next low, it's higher, and then the next high is higher. So in this phase here, the market was pushing in an uptrend, so it made more sense to buy, right? And then now, where we are here, the market has been in a downtrend, so it makes more sense to sell in a downtrend and buy in a uptrend. But where do you actually do it, right? So basically, once you know that the market is in an uptrend, all you have to do is wait for the market to dip. And when I say dip, I'm talking about every time the market pushes down, because you know this is a thing, this is an uptrend. Because you know this is an uptrend. Now all you need to look out for is when the market actually dips, because when it goes down, as long as it's within that trend, it's always gonna go back up again and higher and higher and higher. So all you need to do is to just wait for the market to start pushing low. As soon as it starts pushing low, then you come in and basically, I want to move this thing, what's going on, and you just, you know what I'm saying, you just wait for your time to buy actually, right? And I'm gonna show you how to do those things also, how to basically buy in this type of market. And since we're in a downtrend, that means in a downtrend you have to wait for the market to actually push up, and when it pushes up, then you need to sell, because the overall direction of that market is going down. You understand? So in a downtrend, what you need to do, because we know that the market right now is in a downtrend, right? So I'm gonna teach you guys how to use trend lines, right? I'm gonna teach you a simple strategy of using a trend line. So this is the reversal. This is actually waiting for reversals and then you enter. So it's a way of trading where we only use one line, and that line is called the reversal line, right? And I'm gonna show you how you do that, right? So we can look at what's going on here. Right, we have this high, and then there's a lower high, and then we have this low, and then there's a lower low, right? And then we have this high again. So basically at this area here, we already knew that the market was gonna keep pushing down, because you know we're in a downtrend, right? So the way of the reversal line now, it's this. When the market is going against the trend, here, you would draw your reversal line like this, right? You would draw your reversal line like this, and because you know it's an uptrend, so your reversal line would be drawn like this, and then as soon as the market breaks that line, then you would enter for a sell, right? And then you would see that it's gonna sell, and then eventually it's gonna start going up, right? But if you can draw your reversal line here, you see you can't draw it because the market just spiked up, not really in one candlestick, but it went high. So you need to find a right structure where you can expand this reversal line. You understand? You don't just draw it anyhow that you want. You actually have to find a nice structure to actually put that line on. That makes sense. You see, just like this one, allow this market to be irrational, because sometimes the market won't make sense. It's going to be irrational, so it needs to be allowed to do its thing, and then eventually when it breaks out is when the market breaks the trend line, or in this case our reversal line. When it breaks out, then you know you're entering for a sell, right? And then it's gonna push down, and sometimes you still take losses, but you see we have so many places where we put our reversal line. You see, just like here, we're a breakout, and then it went back up again, but then it eventually dropped. So these are some of the things you're gonna have to be prepared to deal with and adapt to. Some things that you just need market awareness, which comes after time. You understand? So here you would also have one, and then a breakout would happen here, but sometimes your breakout you'll see them only later because this candlestick it pushed so far in just one candle. So by the time you enter, like there's not a lot of room and anything can happen. And you see it pushes up. When it pushes up, it gives you a nice structure there to draw your next line, right? Oh man, excuse me. Yeah, I'm dying, guys. This flu thing is not a joke. So you see we have another breakout here, and in this breakout it moves. It doesn't move as further as it did here, but you know, these are some of the, you won't know how far the market is gonna move in your direction. You just have to repeat the same thing over and over, and sometimes it's gonna go far, and sometimes it's really gonna, you know what I'm saying, it won't really go that far. And then we also have this one again, but even if you trade like this, at first you would make some nice little profit there, but it wouldn't be much, and then it will start going against you. So some of these things, it's gonna depend on how you deal with this type of things as they come, you know. And then you can have this line now. So even after taking this loss, if you took a loss, right, and then the market goes up, and then now you have a structure like this, when it breaks through now, you can see that it moves almost the same way as it did there. So this type of movement would make you a lot of money. And then now what's going on with the market is, you see, it's giving us the structure. It's giving us the structure in the building. It's giving us the structure, so it's about to break. So if it breaks, then you know you're gonna sell as such, right? So the uptrend one, because now I just told you the downtrend strategy. You only need one line for this, and trust me, if you're consistent enough with it, you will definitely make a bag in the building. All right. So with this one, with the buy now, so to speak, let's have our line. We also use the same line, but it's just slightly different because the market is going up instead of going down, right? So when the market goes, because you need to first establish that it's an uptrend. So we had this turning point, this low, then we went to a high there, then we had higher low, right? At the higher low now, it goes to a higher high. So from there, our line that we can have, but we're not having the greatest setups in terms of buying. Our line that we can have is this one, right? So the buying one, the line goes from the top to the bottom instead of that one that goes from bottom to the top when it's time to sell, right? So when the market goes down, isn't it I said, when the market goes down, we wait to buy. So basically, when it breaks this line, that's when you would start buying, and then you would have another formation there like this, right? And you would draw your line like this. So when it breaks out, you're gonna buy. As soon as it crosses this line, then you know when you're inside, and you know what I'm saying, just secure some profit and leave, because sometimes the trend is gonna change. Because if it fails to make a new higher high, it means the strength of that trend is getting weaker. Oh god, the flu is kicking now, you feel me? But yeah, so we only need two lines. Actually, we only need one line when we're buying, and we only need one line when we're selling. And you just need to know the type of trends, and this thing you will literally see it everywhere. You see, we had a nice downtrend, nice downtrend, high, low, lower high, lower low in the building. So you already know this thing is gonna break out somewhere. So you can still find your lines. You can still find your lines. Oh wait. You see, you can still find your lines as such and wait for those breakouts, and they're still there. You understand? These things are still there. Once you see it, it's almost like you can't unsee it after that. You understand what I'm saying? So just practice on this, and I have some big things coming. I feel like I got some big things. Just be part of the thing. All you need to do is be part of the free Telegram channel that I got going on right now. We're really pushing. You know what I'm saying? We're really pushing So even if you can see this all these diagrams are gonna be sent to the public Telegram, just so it's easier to you know what I'm saying, to reference, a point of reference in the building. So we said uptrends, your highs keep getting higher and higher, as you can see, and your lows keep getting higher and higher also. So when the market goes down, that's where you draw a line, breakout, you buy, line, breakout, you buy. You know what I'm saying? Just rinse and repeat. And for downtrends, and this works with any type of instrument, I was just showing you how I do it with NAS, because NAS is NAS 100 or US Tech, whatever. That's where the money is at. Or indices, let's just say indices one time. So our downtrend, you see the highs are going lower and the lows are going lower. So when it goes up, you draw a line, breakout, sell. Up, you draw a line, breakout, sell. So you know what I'm saying, that's basically how you're gonna do this. And then last but not least, I'm gonna teach you how to manage money now, right? So all positions need to have stop losses. You know what I'm saying? All trades need to have stop losses. And you should risk less than you're willing to think. You should risk less than you're willing to gain. Let me explain what that means. Don't even worry about what's there. Let me explain. So your stop loss, right, your stop loss shouldn't be the same distance as your take profit target. The take profit target should be smaller. So when you lose smaller, and when you win big. You understand? You must always include a take profit on all positions. Not really. You know what I'm saying? At the time when I made this, I used to include positions all the time and every day and take profits. But now I know how to manage my trades. But for someone who's a beginner, I think you might actually need to have take profits on all your trades. You understand? And after your trade is executed with your stop loss and take profit, leave it alone. You understand? It's gonna be hard when you're risking a lot of money, but there's nothing else you can do. You feel me? You're just gonna have to learn to deal with the emotions that are gonna come with trading, because there's emotions. Trust me. You need to apply these rules, man, on every trade. Every trade. There's no trade that should never have a stop loss. Stop loss is like the number one thing. And number two rule is do not add to a losing position. If your trades are losing, don't even add more, because dog, accept. You feel me? Just accept what's going on in the building, because there's nothing else you can do, Mfethu. There's nothing else that you can do. You feel me? So I'm trying to remove this thing so y'all can see me full screen style. So ladies and gentlemen, it's your boy vussanie. Go sign up. Go sign up. You feel me? The best broker in the building right now. Trade 2 for 5. I just put the link there in the building. You understand what I'm saying? If you don't have a broker, and go join our public Telegram. I can't stress this enough. I'm really trying to help you niggas out. You feel me? So go join it. I'm gonna send this PDF file that I use for this video there in the channel. You feel me? So it's your boy vussanie in the building. I'm gonna see you guys on the next one. Subscribe, like, and have a blessed time and profits. Peace out.